live trading US non-farm payrolls today. We live trade big events all the time, and so this is going to be hopefully an exciting one, and we'll talk a little bit more about why in a minute. But before we begin, we would like to share with you this disclaimer that says trading Forex carries a high level of risk and may not be suitable for all investors. Past performance is not indicative of future results. The high degree of leverage can work against you as well as for you. So make sure you're cognizant of all the risks before you begin trading. And that's true of trading FX, CFDs, any type of asset class out there. Now, the way we trade, and for any of you who've traded with us in the past, is we're able to trade these big events and do them time after time because our focus is trading the event risk reactively, which means that we're pretty relaxed before the number comes out, and we only jump on the opportunities after the number is released. It's usually the best way to trade because with an event like non-farm payrolls where there's so many underlying components, you may be right on the absolute amount of job growth, but you may be completely wrong on average hourly earnings or the unemployment rate. So there's a lot of moving parts, and it's also true of central bank rate decisions. And that is why it's extremely, extremely important to wait for the number to come out and then figure out what the actual outcome of the report should be. In addition to that, the moves that you're seeing going into the events, like for example, the US dollar is fairly strong going into today's NFP release, could easily be erased easily be erased off of a big event like non-farm payrolls or any type of rate decision. So that is why it is essential to basically focus on waiting for the event risk and then trading afterwards. So what is expected for this non-farm payrolls report? Boris, if you don't mind, there's some people asking for this link for the session in the room, so please give it to them.
Okay, I'll do it.
What is expected for this non-farm payrolls report? I mean, context is the most important. And for those of you that are just joining us right now, in the first 10 minutes before the release, we're just kind of talking about what we're going to do and our game plan, and we don't trade until after the number is out. So in terms of the non-farm payrolls report, you can see first and foremost, the market's expecting an okay number. I mean, this is weaker job growth, 195,000 versus 261,000 expected. And this anything around 200,000 is pretty much a good number because it represents consistent job growth and basically will make the Federal Reserve satisfied with the performance of the labor market and move forward with their rate hike. Private sector payrolls, at one point in time, private sector payrolls used to be very, very important, but seems to have fallen in significance these days. The market just kind of focuses on the headline number and some of these other underlying components. Manufacturing payrolls are expected to be softer, but that really doesn't matter at all. What does matter is the unemployment rate and average hourly earnings. Unemployment rate expected to hold steady. Average hourly earnings expected to grow significantly. And if anything, I would say that the most important part of this entire report is not the amount of job growth, but average hourly earnings, wages, because wages is the problem that the U.S. economy has. So we need to see what wage growth is, and we need to see, basically how that fares in the market. Because if wage growth is, 0.1 and non-farm payrolls is 200, the dollar can actually fall and not rise because the big disappointment was in wage growth. Wage growth could be 0.3. Non-farm payrolls could be 175,000, and the dollar could actually rise as a result of that because wage growth is the most important. So that is why it's important to have to be aware of what to look for when we are trading this non-farm payrolls report. Now, I also want to talk a little bit, before we get into how to trade NFPs, I want to show you a little table that I put together for the non-farm payrolls report that gives us a sense of which way things can lean. As you see, if you're looking at the price action for the dollar is still very, very strong, minutes before the release. And this is quite important because the leading indicators that we have for non-farm payrolls, the ones that we typically follow in the labor market report, it allows us to try to handicap the outcome of NFPs, actually skew heavily towards a softer number. The only argument in favor of a good jobs number is consumer confidence, which rose, the Conference Board's Consumer Confidence Index, which rose from 126 to 129. All of the other arguments, like ADP declined, the employment component of service sector ISM declined, the employment component of manufacturing ISM declined. The confidence number, the consumer confidence, actually offset by a drop reported in the UMich index, University of Michigan index. Challenger reported a 30% increase in layoffs. Jobless claims are up, continuing claims are up. So I'm actually surprised by this dollar rally because the arguments certainly skew towards a softer release. Now, of course, the market is already looking for a quote-unquote softer release, 195 versus 261,000. But it could be weaker than that. But then again, also, what matters the most is average hourly earnings. So how are we going to trade this non-farm payrolls report? Well, first of all, the game plan is I focus on the majors. So dollar yen, euro dollar, anything with a dollar on the other side of it. Boris focuses on the cross opportunities. Yeah. So dollar yen is generally.
Could I interrupt you now before we get, because I want to get everybody set up. So just want everybody to understand what the cross opportunities are going to be right now. Going into non-farm payrolls right now, the relative strength, currencies that are relatively strong relative to everything else are the commodity dollars, the Kiwi, the Aussie, the Caddy. Meaning that if the number is a blowout, super great number, on the yen crosses, what I'm going to be looking to do is to buy Kiwi yen, buy Aussie yen, buy CAD yen. Probably Kiwi yen would be my number one choice right now because it's a relative strength bid, meaning that it's very unlikely to go down much more and the yen is going to go a lot. On the other hand, a really terrible number right now means that my favorite trade to short is going to be pound yen because the pound is really getting pounded right now post-Brexit. So anything that's negative is going to just simply add to its woes, and obviously the yen part of it is going to drag it down. So Kiwi yen to the upside, pound yen to the downside are my favorite looks right now as we stand before the non-farm payrolls. Go ahead, Kate. It's all yours.
Okay. So, I mean, at the end of the day, regardless of all these pairs, dollar yen, the dollar itself will, move quite a bit off of the number. I mean, everything will probably see a pretty clean reaction. Dollar yen will probably see a very clean reaction as well. We're actually trading already at our target. I put this out, very late last night, and we're already at target. So we need to adjust our numbers a little bit. So if the NFPs is 180,000 or better, and which is actually, this is less than the forecast, but that's okay. And average earnings exceed 0.3%, or meet it. If it meets 0.3%, that's that's great as well. And the jobless rate, the unemployment rate, stays steady at 4.1%. Dollar yen is heading to 114, minimally, maybe even 114. Maybe even 114.50, probably even 114.50, which is the spike high in November. Now, since the dollar has run up so much going into NFPs, if the number's soft, you're going to see probably a much more exaggerated reaction in dollar yen. And soft basically means NFPs 160 or lower, which isn't terrible. But the real key is average hourly earnings. We need it below 0.3%. The closer to zero, the worse it is. Obviously 0.1 is worse than 0.2, and you want to see the unemployment rate rise. That's what's going to take us to 112. Anything in between this, if it's weak, we'll still see a drop, but maybe won't get all the way down to 112. Maybe we'll get to 112.75 or something like that. If earnings is 0.2 and NFPs are good, the whole gist of it is whether NFPs is good enough and for the Federal Reserve to raise interest rates. And it would have to be quite horrid for the Federal Reserve not to raise interest rates. All right, so we're getting really close to the data release. I'm going to put on my Bloomberg screen, and so I'm going to be looking for euro as well as dollar-yen opportunities. But I just want to look at the euro for a minute. Okay, and I'm going to put on my Bloomberg screen so we can react to the news and get a good sense of what it is as soon as it comes out.
Now, just remember that the best trading opportunities happen when there's deviation from expectation. If we're sort of like at 200,000 with 0203 print, it could be just a very mild reaction. So
right.
Be aware that we need deviance in order to really.
We need a big surprise in one part of the report or another.
Although if average hourly just meets at 03, that's still going to be net bullish dollars. The key thing, we need to see wages finally start to creep up.
03 is a great number, actually. It's 03, 175 is still going to be positive for a dollar as long as the unemployment rate does not increase for some reason or other. So I'm going to call out my trades, and Boris, and then shortly thereafter, Boris is going to take over the screen and actually, post these trades on the platform.
Right. We're going to see the screen, and I'll post my own trades, and then hang out afterwards because I'm gonna talk to you strategy, special and non-farm payroll strategy that we'll be able to hopefully trade a little bit later in the day.
So we're 9 seconds away.
Yeah.
Really strong top line number, slightly weaker average hourly earnings, unemployment rate holds steady. It's okay. It's not fabulous.
Okay. Nothing great.
But I think it's going to rally the dollar because I think the market's interpret it as good enough. So we're going to give this a shot and sell euro dollar at 32 or 30, whatever you can grab.
I just bought Kiwi dollar at 77.75. I'm actually going to take the screen, Kay, now.
Yeah, go ahead. I'm going to close it here for plus. You grab 12. It's moving fast, which is the typical of.
Okay.
Sorry.
I think you have to make me the presenter now. You just have to give it to me.
Okay, sorry. I actually I meant to sold dollar CAD at 32. Sorry. Stop 20, target 20. Here. Because this is actually
did you make
sold dollar CAD at 128.32. Stop 20, target 20.
I'm not. They're not seeing my screen, Kay.
I've given you control. I don't know what they're seeing.
No, they're seeing your screen still. I don't. Hang on.
Here, let me change here. Let me make you the presenter. See if that works.
Yeah, make me a presenter. That's it. Show my screen. That's it. Okay, now you guys should be seeing my screen. Roger, please confirm that they're seeing my screen now.
Right, I'm gonna buy a little dollar in here at 30.
Yes, we are seeing your screen now, Boris.
Okay.
Actually, I'm selling a little euro dollar here at 50.
Okay, you're selling euro dollar. I'm going to follow you.
17,
I'm going to follow some of Kathy's trades right now.
Target. I'm going to get out of this dollar CAD because I was confused. So I'm just in one trade right now, selling euro dollar at 117.50. Stop 20, target 20.
It's not working.
Let's see what yields are doing. Yields are actually U.S. yields are down a little bit, which may explain why we're not. First of all, we're not seeing a huge reaction in dollar, and it's actually kind of disappointing that we don't see a big reaction because the number was okay. I mean, it's certainly good enough for the Federal Reserve to raise interest rates. And it's actually good enough for them to maintain their guidance.
What's happening is you can see there was just a little bit of a delay in I guess just because it's non-farm payrolls server was a little bit busy. You guys can see my screen. So I sort of piggybacked on Kathy twice. I think I'm going to get rid of this one of I can't get rid of this trade now. There is the initial trade, as you can see over here. That was my Kiwi yen buy at 75, looking to get out at no, I'm sorry, 65 was the buy, looking to take profit at 75. That was sort of my best pro positive dollar trade. And I'm also piggybacking on Kathy here for euro dollar sells.
Well, you helped me put my trade on, right? This is my trade 117.50, 20 stop, 20 target.
Yes.
So did you double up or?
Yeah, I doubled up because the screen was just my screen was.
Okay, so actually we only have two trades on. We basically have my short euro dollar and Boris's long Kiwi yen.
All right, I'm trying to kill this one. I guess I killed that trade. I finally got it right. Okay, so yeah. So now we have these two trades. We're just trying to float it out, trying to see if we can get to the target. What's your target on the euro? It's
20 pips. But we may take it earlier because it's not, the market's really, honestly, the market's not really moving. I mean, dollar yen is what? Dollar yen is 10 pips away from where it was before.
Very quiet, right? In many ways, this is actually a great market to be in crosses like I am, because if you get any kind of movement, it helps. Like right now, for example, Kiwi is moving up a little bit. That's helping my Kiwi yen. We're almost there. Let's see if those great Pepperstone spreads help me execute the trade. I'm kidding, guys. It's actually doing very well. Look at the dollar.
Close your dollar here. Close euro dollar here for plus 10.
Okay, so we're done the euro dollar, plus 10.8 on the euro dollar. Good job, Kathy. And we're almost at Kiwi yen. All right, you know what? Let's close Kiwi yen to bank another one. So that was I should have banked it a little bit higher, but okay. So 17 pips done on both of those.
Yields are starting to move back up. I think there's more juice to this dollar rally. Before I told you they weren't really doing anything. I think there's more juice to this dollar rally. I still think.
I'm going across the spectrum here. I'm trying to buy. It's just taking a little time to execute.
Buy a little dollar yen here, 52. Let's see if we get anything.
I'm chasing a little bit of my Kiwi yen here. I already made the money in Kiwi yen. I'm going second. Actually, you know what? I'll leave just the Aussie yen. I don't want to double up on the trade. So I'm long. As you can see, I'm long.
Dollar yen at 52. I don't know if you saw that or not.
Okay, I'm going to buy it for you. Right. It's taking a while to execute. That's the problem. There it is. Just taking.
Yields are huge guidance when it comes to these. When you can't really figure out what's going on, yields really help you get a clue. Because when I first said, yields weren't really moving, we were at only up 1 basis points on the 10-year rate. Now we're up 2 basis points. So that's pretty positive for the greenback. Dollar yen may be finding some resistance at 113 or 1550.
Right here. So if you guys watch this, if you guys seeing my screen, let me just show this to you. Look at the this is the price window, right? So the absolute high is around 57, right? One of the most interesting behavioral characteristics of non-farm payrolls is pre-event highs lows. If the market can take out the 57s, very bullish, and then we start running. If we can't, this thing is going to die on the vine. So really, the battle now is around this whole 57 in dollar yen. So, we're participating here. You're in from around 50, I believe, right, Kathy?
52. I think I might want to sell a little euros too. Here at 36. Just give it a shot.
Okay, I gotta refresh my. Okay, so we sold euros. Now I'm getting a lot faster execution.
The reason is because I think euro may have a little bit more room to go than dollar yen.
I also like pound. Can I sell pound?
Yeah, go ahead and sell pound if you want. I'm going to close my dollar yen when it goes back to break even, because you can see that euro dollar is actually moving more than dollar yen. So I'm closing dollar yen here, break even 52.
I'm going to sell. I just sold pound too. So I just sold pound too. This is a relative. I don't usually trade on majors, obviously, but it's basically a relative weakness trade. It's clearly mildly dollar positive, the news, and the pound has been very, very weak all morning long because they're selling it off on Brexit profit taking. So if there's any kind of pro-dollar flows, I think the pound gets hurt most. And I'm, as you can see on my chart, as you can see on my MT4 here, around 91 is where I'm looking to do. We'll see.
So right now, I only have my dollar in trade is closed already, Boris.
Oh, sorry.
Break even at 52. So I only have a euro dollar trade on. That's my only trade on.
Okay. I'm short Aussie yen and pound effectively in this structure. We'll see if we'll see what happens. It's it's a slow motion car chase today. It's very
but yields are slowly creeping upwards. So unless they were moving in the completely opposite direction, and you're seeing this dollar kind of stagnate and then yields start to go to less positive, I would say maybe we should reconsider our trades. But actually, right now, as we speak, they're still at 2.2. So that's a pretty healthy move.
Yeah, exactly. Exactly.
So sometimes we have to wait. Unfortunately, it wasn't the fireworks that we had really hoped, because this was the last non-farm payrolls report before the final Federal Reserve rate decision of the year. So I think everyone was really hoping that it would give us some reason for optimism, just some juice, I guess, in terms of market movements. But the number came out, pretty close to expectations if we break it down. The change in non-farm payrolls was pretty good, but the same amount is offset by the revision the previous month. The unemployment rate held steady, which is nothing to worry about. And average hourly earnings growth didn't meet expectations, came in 0.2 versus 0.3, and the previous number was revised slightly lower. But ultimately, it's the market interprets this to be good enough. At least that's what I think they do.
Yeah, I think the inexorable, although last month was a little bit negative downward, but this is upward. It's just kind of like the inexorable trend seems to be that finally wages, there's a modicum of distribution of wages. The jobs have certainly reached peak, right? We pretty much peaked out at job growth. And now the big question for the market is, can that translate into higher wages? And so far, it's giving it it's certainly not giving it a negative signal. The wages are creeping up, maybe not as much as what the market wanted. And there was obviously a lot of, as Kathy was saying, there was a lot of pre-buying of yen ahead of that. But now we just need to, we need to see if the market feels confident enough about going forward. Let me just let's look at the yields here. The yields are modestly. What would be super bullish, really super bullish?
The yields are actually starting to slip right now.
Yeah. What I was going to say would be super bullish for our cases if we got to close to 240. 240 has been a key level in 10 years U.S. and we need to see that get up there. But we're kind of we're putzing around. You see this as a result. You're seeing dollar yen come in a little bit here. All of the anti-dollars are rallying, so we're a little bit on the wrong side of the trade here for now. We'll see if this stabilizes.
Yeah, it seems like it's moving a little bit.
Looks like all the yen crosses are kind of selling.
I'm gonna flatten out here at 48 in the euro dollar.
Okay, let's see if I can kill the euro dollar. Okay, I'll kill the euro dollar trade.
Just give it a minute because yields are kind of slipping, which I don't love.
So this is a great example of what I was saying earlier, if you guys were listening to me, that the best place to hide out in a non-directional or like kind of a blah type of a trade, a market where there isn't a definitive, incredibly strong beat on the numbers, is in the crosses. Notice that all my cross trades working fine, even when things are slipping. The other part of the component is
dollar yen here. Let's see if it seems like it's really, yields are really falling. Sold at 32.
So, I'm kind of barely holding on into this pound trade. We'll see if I can survive the stops here. But it goes back to the idea of like how the road less traveled is often the most profitable, right? We all love to trade the majors. We all love to trade directional calls. Those work really, really well when you have clearly definitive trade mandates. But when you don't, trading crosses is a much better solution. So Kiwi yen worked beautifully. Aussie yen seems to be holding pretty well. Really, it's almost as long as you pair the strong with a strong, which in this case the calm dollars were very strong before the report, which means that they were clearly an opportunity after the report. And we'll see. We'll see how that works out. Roger, do we have any questions while we're kind of hanging out there waiting?
Yeah, there were a few questions. Someone I think was watching your trading platform, Boris, and they were asking if you always use a 20-20 stop and target level.
When we trade NFPs, yeah. This is a pre-configured template on my very special EA that I have here. That I like to and Kathy, I trade with a negative risk reward ratio. I trade with a 10 target 20 stop because I'm looking for very high probability setups. Kathy likes to trade with more balanced risk reward ratio of 20-20. So that's basically how we do it. Right now, generally the way we trade is usually Kathy trades her account and I'm trading my account. Today, just because you guys have only one set of eyes and one set of screens, I'm basically mirroring her trades on my account, on my Pepperstone account. But it's not it's not a true indication of her trading style. It's just simply to give you some cues. Right now, she's obviously out of all her positions, and maybe looking for new opportunities to go. This clearly the pro dollar move is just not working.
Yeah, I'm actually, it's really hard to tell which way this is going good. I'm actually kind of leaning towards, I sold a little euro dollar here at 117.52, 20 stop, 20 target. Let's see, can you sell it for me, Boris?
Yeah.
Let's see if we get any upside momentum here. I mean, it's not moving.
All right, I sold 53, so I got a little better prices. We're getting a lot of water, so I'm just going to increase the. Roger, can you just confirm that they're seeing my screen pretty well, that it's visible? Because I'm working out of a VPS environment. I'm a Mac person, so we're obviously working out of a virtual cloud on a Windows environment. So.
Yes, confirmed on my side, and we've had several clients confirming they're able to see yours as well.
Okay, that's good. That's good. It's nice and clear. Kay, I mean, this is interesting. If we reverse, like in other words, if euro goes into the 60s, I think it's going to be a buy, not a sell. Basically
60 is a very important resistance level, and so that's why even though I have a 20 pip stop, I'm not really going to let it sit till 20 pips because 60 is really key.
Right. I mean, like it's very much do or die here on whether the dollar performs, right? But one of the things that I think is so interesting to watch right now, as you seeing a lot of these trade ideas develop, is how much less stressful it is to hide out in crosses on these particular situations.
I'm actually closing my euro dollar at 55. I don't really love it. Like
okay.
50.
Okay, so I close it out. So I close it out. I'm just nursing. Really just nursing, almost for academic purposes, this pound trade, just to see if I can survive. Almost at this point, just to see if I can survive the stop, because closing it out at this point it makes no sense. But the true positions that so far I'm working on is of course the yen crosses on the Aussie yen. See, my supposition, and I don't know if we'll see if this is true, is that after early profit taking, we'll get a secondary wave of buying in the yen, and hopefully that's going to take me out positively in my Aussie yen trade. I'm just kind of.
I actually think the market's kind of discounted all of it. And it's, if it didn't get any juice initially, I'm not sure whether it's really going to get much juice anymore. I mean, I would actually sell dollar yen here as a last trade
Really?
and see how it goes.
Okay.
Yeah, I would. I mean, I'm sure at 34. I would sell at 113.34 and see.
So here's where.
Yes. Put the trade on, Boris?
Yeah, sure.
That's going to be my last trade, and we'll see how it goes.
Okay. So I'm a little bit, maybe Kathy's right, so I'm obviously going with her. This way, the great thing about being long yen and short yen, one of the trades is going to work. My only, and she may be right, the momentum is kind of really turning. My only, where I would be really confident in selling dollar yen is below 13.22, because those are the peak bottoms of the move. So if we get, technically, if you sort of, you get this initial upside burst, right, of trading, and then you, I'm watching my pound here. I'm just curious to see what the hell I'm doing with pound here. So the idea here is, if we break the heart of the bulls by taking out the lows on the yen side, that would really push us towards the 113 level. That would really push us towards a move on the 113 level. And I think if we actually break the 13.22s, I'll probably get out of my Aussie yen more or less unharmed, because the Aussie will probably offset most of the decline in the yen. But that's kind of how I'm viewing it. But Kay is seeing is basically front running this momentum. She's assuming that they're gonna break the hearts of the bulls here. And
I mean, honestly, if you take a step back, nothing is happening. We're pretty much at pre-NFP levels, and we're just basically trying to squeeze trades for the sense of trading, because the initial reaction was relatively modest, and these things are only generous to trade when we have a big move and a big surprise. Otherwise, it's more of a non-event than anything else.
Yeah. Unfortunately, it is today because it's right in line. It's neither what is that fairy tale? It's neither too hard, neither too soft. I forget what that expression is. But it's like it's just vanilla. It's plain vanilla. Anybody, Roger? Any questions in there? Anybody asking any particular pairs that they may be looking at that we're not looking at?
Yeah, someone was asking what you thought about the dollar CAD.
Yeah, so I haven't paid any attention, but Kay has been actually. So let me put the dollar CAD chart on it, and you guys can. Kay, maybe you can discuss a little bit CAD-y. I don't have a view here. Do you have any view on CAD-y? Do you think we go to 28 on this dollar profit taking?
Yeah, I think that I'm bearish dollar CAD. Oil prices are up a lot. They're up almost 2% today. And I'd sell dollar CAD too. Actually, I like dollar CAD a lot as a sell.
All right, so I'm gonna.
It may even be a better trade than dollar yen. I'd sell it here, and
yeah, I sold it at 18 for you. Let's see if that kind of works. So we're kind of balanced here. We're short dollars and a little bit long dollars. That's the best way to trade. This way, at least one part of your trade position is going to work, right? I'm being facetious, obviously, but we're trading two separate streams of ideas. And Kay may be right. It looks like dollar yen is kind of starting.
The only wrinkle about dollar CAD, and the reason why I'm not officially in the trade, is because if you look at this 1 hour chart, right now we're sitting right at the 50 SMA, but ultimately I think it's headed lower because with oil prices where they are, and so I would be selling rallies.
So this is the hourly chart. It clearly topped out at 28.50, right? But it's bouncing back up now. It's running back up here a little bit.
So I think the best place to sell dollar CAD, in my opinion, is probably 30s, like 35 would be a really nice place to sell dollar CAD. Maybe just underneath it.
Okay. I wonder if I can do this in my thing. Let me see. need a new chart. Now, guys, hang out because I do have a really nice surprise for you. Even though the event, the actual news event today is kind of very blasé, I have a really interesting idea for you guys, a strategy idea that works really well across all non-farm payrolls. Hang on a second. Let me just do this. Blah, 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 blah. No, I have to go different strategy. Okay, I'm just going to have to do this on a pending order. We're going to lay it out as sell limit at around, I'm sorry, what was the price you wanted, Kay? Like 35, 128.35?
No, don't put a limit in. I'm going to watch price action. I don't trade with limits. I'm going to watch price action. Right now, the only trade I'm in is short dollar yen at 113.34.
Okay, all right. Okay. I was just because my ear hasn't been taking it. So anyways, to summarize a little bit, we have long Aussie yen, which has just kind of been floating around doing nothing. The pound, which seems to be a loser because it's not, unless I get a second burst of dollar buying, this seems to be floating into a negative territory. And two short dollar trades, which is short dollar yen, short dollar CAD. We'll see how those develop as we go. If you guys don't mind, I mean, well, I'll come back to the screen. But if you guys want, do you guys want to hear a little bit about a non-farm payroll strategy that has worked almost every single non-farm payrolls? This assumes that non-farm payrolls were a powerful move, right? So this is a great high volatility strategy. Does everybody want to see that, Roger? Do they want to?
Yeah, we're getting lots of yes typed in right now.
Okay, all right, sounds good. So,
great.
So what I did is that this is a 5-minute chart of a full year's worth of price data for this chart company called IntelliChart, which is $100 a month. I can't believe I pay that, but just for this particular function, I love it. I love the fact that you can do a lot of backtesting on it. And I'm going to just put your attention to like the last 5 or 6 non-farm payrolls, starting with May. Okay, so we're going to go to May 3rd. No, May 5. I'm sorry, and then we'll go forward into the year, and I'll show you the ideas that I have of how to trade this. This is a 5-minute chart. Just remember, it's a 5-minute chart.
I'm going to be looking at to get out of my dollar yen at 113.25, which is pretty much just a pip away for plus 10. So if you want to lay out your targets there, you could.
Okay. So I'm going to just adjust it to 25 for you, so that in case it comes at 25.3, we'll just give it a little bit of a juice. Oh, it looks like, did we get done?
I think we might have gotten done. I'm out 25 plus 10 in dollar yen.
Yeah, we got done. We got done on that. The pound, not a surprise, got crushed. So the only thing that's kind of left right now is the short dollar CAD.
Is it short dollar CAD? I mean, it's flat. Is it your trade or like?
Your
I mean,
trade.
still, I'm not officially short dollar CAD, but if it's flat, you should just close it.
Okay, so I'm closing it then. So I'm closing it because I was going on your direction. So the only thing I'm holding this.
Price is also as important as direction. That's the most important thing, because if you guys, like I said, lay on your I love moving averages. If you lay on your 50 SMA on the 1-hour chart, you'll see it's struggling right above 128.20, and the worst thing you do is sell into support. So you always want, whenever I trade, you always want what I call clearance. You want it to be beyond the moving averages or very far away from support. So dollar CAD didn't get the same momentum to the downside as dollar yen and euro dollar when the dollar moved, because it didn't have clearance.
Right. Now, in the meantime, one of the things that I cannot stress enough, watch my Aussie yen. While everybody was getting stopped left and right or take profit left and right and getting yanked and up and down, right, and trying to guess direction on a straight dollar bet, look how protected we were. We're basically 3 pips against us right now against the move in dollar yen that is 30 pips off the highs. 30 pips off the highs. So the only reason I'm staying here in the Aussie yen is because I'm sticking to my thesis that there's going to be a secondary wave of buying. And if there is, this trade should work. We're going to give it a little more breathing space and let it float, because this may take longer for that secondary wave of buying to come in. But let's let it float, because we've been able to protect ourselves from all the oscillations and volatility of pro-anti-dollar trades by staying in the cross. To me, that's probably the single best lesson I can offer you of how to intelligently trade non-farm payrolls in a non-volatile, in a sort of a not non-volatile, but a non-definitive environment. Non-definitive environment, because it's not really definitive, data set over here. Now, so I think we kind of cleared up. Kay, if you have more trades, come on in. But I'm gonna talk a little bit about my strategy and just show them.
I think I'm gonna find out. I'm done trading. This wasn't, usually I do really well in live trading. My trades made 2 pips, so it's at least we didn't lose money. And my bias is to the downside for the dollar right now, unless yields start to move around a lot. But remember earlier I told you, yields were moving up a lot. They're up, almost like over 2 basis points, 2.2. Now they're at 0.9. So that's a huge change, and explains why the dollar is struggling. So I think, there could be a little bit more, in my opinion, downside momentum in the dollar. And if that is the case, then it seems like dollar yen has moving average clearance. Meaning that there's room to move. Euro dollar can go up to the 80s, and those may be the best bets. Aussie's right at the moving average. Aussie and Kiwi are right at the moving averages, so those are not good trades in my opinion. So the only short dollar bets I think are really dollar yen and the euro dollar. Although maybe it's time to there could be some cross opportunities too.
Okay. Thank you, Kathy. All right, I'm actually going to start with June because it's a more specific example of what I want to show you, okay? Because I want to give you like the classic setup of how this works. All right, so Roger, everybody sees my screen. Everybody sees the data display window. This is very important because this is all part of what I want to show you, right?
Yeah, very clear.
Okay, awesome. All right, so clearly this is June 2nd. Obviously, some negative. Maybe this was like the first non-farm payrolls that was actually negative in payrolls. You can see dollar yen just collapsing massively to the downside, right? By the way, this is not part of the setup, but this is just sort of a tip and a trick that you guys could really put to good use. How do you know if an event is meaningful or not? How do you know if the data is meaningful or not? Right? Well, you could use qualitative interpretation. You could say, well, I think it's meaningful. I look at the value and what the market thought, blah, blah. But a much more pure way, a really much more unambiguous way to decide if something is meaningful or not is if the absolute value, the high-low of the 5-minute bar, the reaction bar on the news event is greater than 30 pips, right? Which is basically about 1/3 of a penny, right? If the news moved something 1/3 of a penny up or 1/3 of a penny down, that's a very, very sounds like I think we got something happened.
No. I booted up a platform.
Oh, it was you? Okay, all right. That's a very, very good signal that there is more to come, right? So you just looking at price, forgetting indicators, forgetting anything else, you can see this was the absolute value of high to low was more than 30 pips to the downside, meaning that there's high probability there's more continuation, right? It's generally a good rule of thumb to use when you're analyzing data. So here's the setup as I structure it. It's a 5-minute chart. We're going to use the RSI. I consider RSI to be the thermometer of the market. It's just like just like the thermometer takes temperature of your body, and you either when you're sick you're super hot, or you're super cold, whatever. This essentially does the same thing. 14-period standard default settings, right? With a 70 being extreme, 30 being extreme to the bottom side. And what we're looking for is the following. First, we need a signal that the price has reached an extreme. In this case, obviously, it dropped below 30 on the first candle. It's a 12.3 reading, right? It actually gets more and more extreme, more and more and more extreme, right? Then we're looking then we're looking for a bounce back, to 36. This is what we call a shallow retrace, right? If you're following this on a visual basis, right? Look, right, you see over here, right over here, the value of the RSI is 37.29 on a 5-minute chart, right? It's kind of like the wave comes in, it washes back, and what we're trying to do, and this is very, very important, and really, really important, is not guess that this is the peak of the wave, but position ourselves in case it is. So if it kind of comes back up and then RSI comes back down below 36, like on this particular candle, right? Then we go short. Because now we have confirmation that the first wave washed up, had a little bit of a retrace, and now it's moving to the downside. And all we're trying to do here at this point, it's a very simple setup. Do not overcomplicate this. It's just 10 target, 20 stop. And the reason why it's a 10-20 is obviously because I want to give a little bit of volatility room, and because of spreads, right? This is an 85 to 90% accurate setup. So I don't need to worry about because when it sets up, it's a very specific set of conditions, very, very specific set of conditions that you want to have, right? So only when I have these conditions do I actually execute the setup. So by the way, my EA actually is configured to do this. It's just today it doesn't. I can just sort of show you. So I'm just floating my Aussie yen is kind of obviously not working. Well, yen stabilized, but now the Aussie is coming down a little bit. But nothing much is really happening. If I were to lay this down on here, you can actually see this. So it's waiting for the RSI retrace, so on and so forth. It's going to try and right now it's going to basically short it. Remember I told you that the 22 is kind of a Maginot line here. It's going to start. If it starts breaking 22, that's going to be negative. We could go all the way down to 113, and probably my Aussie yen trade is not going to work at that point. But even as extreme a stress as this on the dollar yen pair, my Aussie yen is not getting hurt that badly, right? I'm still only 6-7 pips away from entry, so not that badly. So I can afford to hold on a little bit longer and explore the possibility of a bounce back. Anyways, the point being is when we have the kind of structure that we have, so here we had the 36 coming down, we sell 1049 on the close of the candle. Once the candle closes at below 36, it goes above 36, then below 36. Close at that level, 1049, looking just for 39, for 1039. We actually get 34 here as the peak low, and make the trade, right? So that's a very straight directional bet. And let me take you to July 7th, to the next one, to show you how that would have worked out in July. But there is a trick up my sleeve that I can't wait to share with you. So hang on, I just have to position this properly. Just bear with me. Okay, all right, so here's the cool part. I'll show you some very, very cool, one of the very cool subtleties about this particular setup, right? So here's the non-farm payrolls in July. It triggers a negative read, right? 23 below 30, right? Then it pops right back up. It pops right back up above 50, above 50. This is a very, very important signal. This is a way to completely change your mind and trade the other way. The really great way of, the ideal way of making trades is to be right on one side.
Interested, sorry, I'm gonna jump in here. I actually sold some Kiwi at 68.64. If you're interested in joining me in that trade.
Okay, I'll mirror you. Just
we'll see. Yeah.
I gotta pull up Kiwi. Just 1 second, guys. Okay, so we sold some Kiwi, and you see my Aussie yen is leveling out, all leveling out. This may be the longest car chase ever, slowest car chase ever. But here's the thing that I want to show you. Look at this incredibly interesting setup. So we're assuming it's supposed to be negative, right? But suddenly the price action completely turns around, and the RSI goes from -30 all the way above 50. Okay, that's a massively interesting signal to us. That tells us forget the short bias, get long. It went short, and the power back was so strong that it completely went above the 50 boom bust level on the RSI. So here we change tacks completely, and we go, hey, we're going to go long now at 78, targeting 88. It takes a little time, but our stop is 58, right? So the low here is what, 71, 7-pip stop, right? It takes a long time, but I think over here, takes about 30, 40 minutes, which it often does, for the trade to resolve itself in the proper direction. But look how, by being able to interpret the price action through the RSI, we're able to instantaneously put ourselves on the right side of the trade, right? So that's July. Let's go next to August, which is, and this is just sort of to preface you guys, this is really designed for non-farm payrolls only. You could try to modify this setup for other big events, but this works just best for non-farm payrolls. This is the key thing. You can't use every strategy for every idea. They're specialized strategies. So here's August, right? And I'm just going to get a little bit bigger so you guys can get more. Here, clearly, we get a massive, massive burst up. It goes into the 80s, right? We need to be looking. We're looking for a retrace back down to below 64, which happens over here, right? So comes back up, right? Now this is a really, really interesting example, because this is where computers can only take you so far. Remember, this is a programmatic trade, right? It's a trade that says if X value does this, do Y value. That's what the computer does, right? But you as a human being, have to be aware of what Kathy was talking about, price. It's not just direction, it's price. The whole idea is to not overpay for something, right? So in this particular case, we're looking for a return back to 64. It comes in literally like 80 basis points away from 64. You can see my RSI value is 63.22, right? Just misses our ability to get long at market at essentially 5-6 pips away from the retrace low, right? The next candle is the buy candle. The next candle is the signal candle, right? It bursts up. It blows up for like 20 pips, right? It goes, if you go, a high is 88, the low is 60. It's actually 20 to 30 pips. Just massively big move in 5 minutes. Just a ramp. All the algos come in and buy, right? So this is the thing that's interesting. You as a human trader have to have some sense of balance, right? And let me tell you how I would have traded this, and of course you can trade it differently. You could be of two minds and say, listen, it doesn't matter that I just missed the entry. It doesn't matter that this was a massive ramp up. I'm going to follow my strategy because I trust my strategy. It's super accurate. I'm going to get long at 1084, which is the close here, because even though the RSI now is 73, that had a massive burst up and I had a 30-point candle, which I missed, I still think there's more juice left in the trade, right? So I'm going to go long 84 on this thing. And you wouldn't be wrong. You wouldn't be wrong. It would take you about an hour. You'd still make money, right? But if you are a human trader and you understand that, hey, the real bargain price was here, now I'm really, increasing my risk significantly. And remember, I'm 10 points up, 20 points down. Don't want to take that risk. I personally wouldn't have taken that risk. Even though this was a positive trade, it doesn't matter. It's a question of how you assess the risk at a given time. So I would have overridden my algo at this point because I don't think that would have been a legitimately great risk-reward strategy that I had, right? Okay, fine. But either way, the trade would have worked, or you would have just walked away. Here's the interesting part. Here's the really, really cool part of this particular setup. So we go with the flow because that's the reaction to the news, right? But eventually, as we all know, as a non-farm payroll day proceeds, enthusiasm kind of dies down. Whether negative enthusiasm or positive enthusiasm, it kind of just dies down, right? And people sort of, square up for the day and stuff like that. So here's the interesting part. What we're looking for now, this was obviously an up move, right? Huge, huge up move. We're looking now for the RSI to lose the 50 value, Right over here on this candle, as you can see, it loses the 50 value. The RSI now turns below 50. 1077 is the price, the closing price. You guys with me on this, right? So I'm short. Now what I say to myself is, you know what? It's 4 or 5 hours past the event. We've lost the momentum. It's going to go the other way. I'm willing to take the contrary bet. I'm willing to take the profit-taking bet. And now, if you take the profit-taking bet, you short 77, right? You can make another 10 points on just the declines. It takes about an hour or so for us to complete by around 3 o'clock in the afternoon New York time, which is, I think, Australia morning at this point. You have to be a hardcore junkie to hang out with me to do this. But it doesn't matter, because once the trade is in, you leave the stop, leave the target, and go to sleep and do it. It will resolve, and it resolves positive. So if you took the straight up setup, you would have made 10 here, 10 here. If you did sort of a qualitative analysis and you only took the counter trend trade, you still would have made 10 here. That's the beauty of this setup. The very, very cool part of the setup is the same indicator that informs your decision-making process at the beginning of the event helps to inform your decision-making process at the end of the event. So you can make money with flow and counter flow. All right? You guys want to see another example? Do they want to see another example, Roger?
The yeses are starting to come in. Yeah, they want to hear it.
All right, so let's go to just one more example. Let's go look. So this is what, August? Let's see, September 9. Excuse me, September 1. That was the next non-farm payrolls. Let's see if I can roll over here. And I actually have no idea what this is going to show me. So here's September 1. Okay, this is a very cool one too. Actually, I think I remember trading this. This I actually traded live with BK in my own room, and I was wrong on this, and I did the hardest thing in the world, which was change my mind. I changed my trading mind, and then I got right on it, and eventually we all made money. But had I had this setup in my hand, I would have never been wrong in the first place. This is such a cool example of why the setup is so powerful, right? Let me show you how this setup keeps you out of trouble. So here we are, big candle down, right? With the RSI goes to 10, right? RSI goes to 10, right? Now it starts to just kind of back up, right? Like it hits the lows, and it starts to back up. Like there's no retrace. I remember I kept shorting this, going, "What the hell? This is negative news. Why isn't this going down?" Right? But here's the beauty of this particular setup. This setup makes you not guess, right? It makes the price confirm your thesis. So the price is not confirming that thesis. It needs to go up above 36, right? Above 36, and then come down below 36. And it hasn't come down below 36. Doesn't even come close, right? It's 44 in the RSI, right? 44. So my short thesis, not there. It saved me a losing trade. Never got me into a trade because the conditions never set up. But here's where it gets even better, right? Now I see the RSI is actually changing stripes. And now the power moves the other way, and the RSI goes to 50. You see how the candle goes to 50? We go through the round number at the 110 level, right? We go through the round number. So now we buy the change in the power structure to the upside. This becomes essentially a counter trend play. 110.03, and on the next candle we make our 10 points. It actually runs 30 points higher, and so on and so forth. But look how balanced this particular trading structure kept you. It kept you out of trouble by not making you short on a supposition, and then it got you long just at the time when the whole thing turned itself around. All right. So one more thing. I think I have one more example. Let's go to 10.6. Let me show you how that traded out. Okay. Sorry. The hardest part about the software is me actually getting right on the sign. So here's 10.6. This is actually a very funky little structure, because I don't remember what happened here. Maybe it was Trump headlines or whatever, but this just completely reversed. There was some occasionally on non-farm payroll days, which is Friday. Oh, maybe it was, I don't even know. No, I don't think it was Mueller investigation. Whatever it was. There could have been political news here, but the point is that here's news, and here's some other news that comes in and completely destroys your thesis completely, right? Look how well this particular setup survived both of these moves, I think. So here we go. We're up on into the 80s. We're looking now for a retrace back down to 64, which happens right over here. Right over here, we dip right below 64, and then we dip right above 64 right over here on this candle. Let's just say this wasn't 64. Let's just take the next candle up because I'm gonna give myself a harder barrier to cross. This one is definitively above 64. I'm buying 1325, makes 1335, piece of cake, right? But now I'm hanging out. I'm looking for a small retrace, right? I'm just looking for a small move, right? But it doesn't matter whether it's a small move or a big move. I'm just looking for my signal. Here comes a big signal. My signal suddenly changes to 47 to the downside, right? Suddenly changes all the way to the downside. So here on this particular trade, I sold 1323, and it just it's knife through butter. It just comes in. So 10 up, 10 down. I'm actually kind of thinking of calling this my up-down setup. NFP up, NFP down, because it's really what it looks for. It looks for up-down structures for our situation. Let's see how everything is looking. It looks like everything is super quiet. Nothing is really going on here. Yen
I think I'm going to close my Kiwi dollar at 68.60. You guys got in at 68.65.
Okay, let me see if I can.
It's really not doing much.
Yeah, I killed my Kiwi dollar.
Yeah, so I got like 2 or 3 pips out of it. Really didn't do much.
Okay. All right. My Aussie yen is floating. It's turned against me a little bit, but still within my within my stop zone. But obviously, even this particular trade just has not. Even this cross finally just giving way to random flows that are going on over here. Let me just look at the charts here, because now I want to look at the yen. Now that we've had, so here's yen. Yen actually sort of turns. It actually gives a negative signal. Yen is kind of giving a negative signal on all of this. I probably should have traded. I was too busy with all the other stuff to kind of look at this. But if you looked at this on a 5-minute chart, and I didn't, I wanted to show you the setup before I kind of traded this. But if you look at this 5-minute chart, if we're trading it today live, given my structure. So yes, this comes down. We're looking for a retrace back up above 36, and then a move back below 36. In which case, it was right over here. So to close, 1327 would have been a sell point in this particular structure. So let's go and sell the yen. Oh, I have it. I already have it sold at 13. I forgot why. Maybe it's because Kathy told me to sell it. Yeah. So I'm actually the yen at 1327 because your for some reason I had that sale because you were short yen, and it kind of dovetails with my signal. So right now, my signal basically says sell 30.27 for a 17 target with a 47 stop, and we'll see how that plays out. And then maybe in a couple of hours, if the dollar yen rallies and RSI goes back up above to 50, maybe we'll trade it the other way. But we don't know. In the meantime, all my quotes are frozen. That's why I was like looking at my other quotes and I'm like, they're all frozen. I'm like, how come nothing is working? But that's basically it. It's a very, very quiet day today. You're really not getting a lot of reaction from the move. But so far, it's more of a negative bias than a positive bias. We'll see how that plays out. So now, any final questions? Any thoughts on your mind? Anything you guys you have you want to share with me? I'm happy to discuss.
Yeah, Boris. Someone was asking relative to that last strategy you were showing. Would that strategy apply to other news events as well, such as FOMC?
No, so that's what I said. I said I think that strategy works best on non-farm payrolls. I think if you want to use that strategy on other ideas, I welcome you to experiment. I welcome you to try it out. But I think the very unique signature of non-farm payrolls, which is massive burst up and then kind of a distribution and a move the other way, especially on a Friday where you have a terminal market structure. The market is basically stopping in a couple of hours. Creates a very exact and specific behavioral pattern. Whether that behavioral pattern is totally replicable against FOMC or ECB, my view is I reserve the view. But I definitely think, I know for a fact it works really well for non-farm payrolls. And if that's the only case, then great. Then let it be. Imagine you have 12 opportunities, and I think when I ran the tests, it was only one loser, right? So let's say you have 12 opportunities, two 10-point trades on each particular thing. So you have 24 potential trades, 240 potential points, and you lose 20 points out of 240 potential points. Now you're not going to make 240 potential points, but even if you make 150 potential points across the year on a very, very specific setup, that's an incredibly valuable edge. Anybody can find me a setup like that. I'm happy to use it over and over again. So I think you could probably extend it to other news events, but by no means can I assure you of that. I think you really need to experiment and work with it, right? In the meantime, you can clearly see that it's more or less working right now in real time. We're targeting the 17. We'll see if yen kind of crumbles down to the 17 level. Although today is really a funky day, I will say this. It's just I am uncertain about anything today because it was such a blasé fundamental driver that you could take the positive out of it or you could take the negative out of it depending on how it goes. The only thing that makes me and obviously I think Kathy's right that really none of this really matters. It's really all about what these guys decide to do. Where's my yields? It's really what these guys decide to do, and you can see that these guys are not really loving it, right? They're not loving it. It's only up to 200 basis of a point, right? It was at 238, now it's 237. If this thing gets down to 237, yen is not going to stay at these levels, right? So that's really the driver of the trade right now. Any other questions there, Roger?
Yeah, we had a couple of questions on when volatility is very high right after the news comes out. Does that ever affect your emotions and your decision making?
Oh, absolutely. Absolutely, which is why I find, for example, this kind of a setup that takes 30, 40 minutes, before I even consider the setup, and then another an hour or two for it to resolve, a much more sane way of trading.
I'm actually the complete opposite when it comes to news trading. When it comes to news trading, if there's a big move or it's a volatile move, I actually see more opportunity and actually less frustrated than when nothing happens and it's a slow drip.
Yeah, but the question was reacting quick to reacting.
Well, it says emotions, and I said, in terms of my emotions, I feel more frustrated with no movement than actual movement.
Right, because and this is a really great question because it speaks to the different styles that Kathy and I trade by. Kathy is what's called a proprietary trader. Basically, she doesn't have a structure. She doesn't have if A does B, do C kind of a thing. She's a completely holistic trader. She takes a look at what's happening with the price action, what's happening with a particular currency pair, what is the actual fundamental impact of which she's reading, and she's able to process all that in a millisecond. In a millisecond, she can say, "Oh, this is positive. This is negative. This I want to be in at this price." And then, if it goes to this, I want to be in at that price. And she will just bang away mercilessly at the price in the first 10, 15 minutes. And almost always her instincts are dead on. Dead on, especially, and this is kind of really interesting, her instincts are really dead on in something that is much softer to interpret, which is central bank policy. One of the hardest things to trade is what's, central bankers very infrequently will say, we're definitely raising rates, we're never raising rates. They're never that definitive. They like to just, yappity yap. And Kathy is really good at extracting the directional cue that the bankers want you to follow really quickly. And that's what makes her trading post-event so effective, because she's very good at reading the sentiment of the market right away. Now, I'm not bad at that. And when I try to read the sentiment of the market, obviously I read it through the crosses because I find that to be a better trade. But I find that, because I'm not that, I'm nowhere near as good as she is at being able to read the sentiment of the market. I try to construct behavioral models, right? I really call these behavioral models. I hate the word technical analysis. I hate the word because I consider all technical analysis to be BS. The only indicator I ever used was RSI. The other day we're trading. What the hell were we trading? We're trading Canadian data, and Kathy asked me to lay down moving averages on this particular chart, and it was like literally painful to watch at how bad I was at being able to lay down even moving average. I've never looked at a moving average in like 10 years. But it doesn't matter. Everybody has their own different methodology. The point being is I like to create a behavioral model and then trade that behavioral model with as distinct inputs as possible. And the reason why I like RSI is because I consider it to be a super easy and quantitatively well-defined input into my behavioral model. That's really how I view it. So very different approaches to trading. They work both. They both work well. But I find like the user who said, do you let emotion get in the way? I let emotion get in the way all the time. I remember that particular September non-farm payrolls that I showed you guys, where it was like one way and then just completely went the other way. It took me 30 minutes to admit to myself that I was wrong. That I couldn't believe that yen was rallying against some crappy number, with really bad stuff because I misread there was. If something, if price is doing something you completely not expect, what that means is not that you're right. What that means is that you're just blind to a variable that you're not seeing. There's another variable that the market is seeing, and I forget what the hell it was. I think it was tax reform or whatever it is. There was some other variable that the market took that day to be much more important that I dismissed, and that's how everybody gets in trouble, by laser focusing on the one idea, not appreciating the fact that if price is going against you, it's probably because the market is not even thinking about this. It's like you're yelling at somebody who doesn't even listen to you. And you're like, why aren't they listening to me? Because they're deaf. It doesn't matter if you yell at them. No matter how hard you yell at them, they're going to ignore you. So that's how the market acts, and that's why it's really important to be humble and say, you know what? If my view is not being corroborated, then clearly I'm the blind one, not the market. So that's my view. Any other questions?
Yes, one related to that on the yields. A couple of questions for Kathy came in about how important do you believe the yields to be, and it looks like people wanting to know how they could watch those.
I'll answer that first, and then I'll let Kathy extrapolate, because you can obviously see how important yields are in real time. Dollar yen is falling, exactly as Kathy predicted, because yields are falling. This is the 10-year yield on TradeView. Those of you, I highly recommend this. This is a really nice little piece of software. It doesn't cost much, and it will give you the yields. The U.S. 10-year yields. It will give you all the yields. It will give you the European yields. It will give you probably Australian yields. I don't even know how to call them up. But currencies are mini bonds. They all have a yield component to them. So if you don't understand yields, you really don't understand currencies. And that's why you can literally see in almost real time. If this thing goes to 236.5, this looks like it's very likely going to go to 17. Everything. Go ahead.
So just to kind of summarize that, yields are the first thing that I look at when I start my day, and it's the thing that I watch closely throughout the course of the day. It's a staple to my trading. And a lot of, pretty much all of my decisions are made based upon the movements in yields on an intraday basis, and even on a day-to-day basis. And this thing that Boris showed you is tradingview.com. It's actually free. You don't even need to pay for it. You pay for it if you want to remember your settings and everything, but it's pretty much free, and you can watch yields, there quite easily.
Yeah. Yeah, and you can not only can you watch yields, but you can watch oil, you can watch gold, you can watch Bitcoin. Look at Bitcoin, Jesus! Oh my God, this thing just completely flipped around. It was 13,000. Don't ask me. I don't want any questions on Bitcoin, because we don't trade it. We can't. Chicago Mercantile Exchange is coming out with futures. Maybe we'll be able to trade it eventually, but for us in the U.S., I have no view. I have no idea if it's a $1 million product or a $1,000 product at this point. I'm as clueless as you are on this particular product. All I know is it's a 10% up, 10% down every 5-minute product. So it reminds me of the old days when I used to trade Ink to Me stock in 1990s, dot-com bubble, which were really good days. But anyways, so any other questions?
The rest of the questions are about Bitcoin, so why don't we hold off on that?
Yeah, guys, your guess is as good as mine. Really, I don't have an effing clue. I don't think anybody does. You know, you could make an argument that this is the biggest parabolic high since the tulip mania, but you could make the argument that this is the single greatest transformational technology since the internet, right? And both have legitimate, logical reasons behind it, right? So I find it impossible to determine which is which. So I prefer to stand away. But I'm sure there are a lot of Bitcoin millionaires, if you guys are long at this point in the room, right? And no, you can't. I mean, maybe you could. I don't know. I mean, I've never tried it. It'd just be fun if you guys want to look at. Well, let's look at Bitcoin 5-minute chart, right? So here we are. We hit a. Let's just for this is for fun and giggles, right? So we hit the 5-minute chart. First of all, you'll never be able to get any of these prices, right? Because we know that the bid-ask spreads on this is like 300 points wide. But let's just assume that this is actually a liquid instrument. So we're 19, right? Then we come back and we completely flip around. We go to 40s, right? We go well up, and now we have the 50s. We're looking for the 50 signal. So here's the 50 signal, 1492. Let's buy that with a, I don't know, 1,000. No. No, I shouldn't say 1,000 because it's ridiculous. But 100 is just too little. So I guess maybe 500 point target and 1,000 point stop, right? That's how I would be day trading it, right? So I'm long this thing at 14,900 for argument's sake, just for argument 900, targeting 15,400, which I'm actually, by the way, almost right there, right? With a stop at 13,900, right? So it drops to 14.5, and then and there I just hit my bid. We made money trading my setup on Bitcoin. That's about the only valuable thing I can give you on Bitcoin. If you guys go make money with it, please email me a note, make me feel good, or just tweet out to FX Flow. But other than that, I couldn't possibly predict what the hell is going on with this thing. Any other questions besides Bitcoin, Roger?
No, I think that's going to wrap it up.
Okay, all right, that sounds good. Well, guys, I hope you enjoyed it. I'm sorry we didn't get the kind of big punch non-farm payrolls event that it really does. But more importantly, I mean, the reason why I was so excited about doing this is I wanted to leave you with a tangible, long-term, usable structure, something that you could use over and over and over again, not just for this non-farm payrolls, but for non-farm payrolls all the way down the road. So feel free. And if you have any questions, obviously email us. We'll be happy to answer any questions. We can put the let me. I have the screen, right? So let me see if I can. I'll just type it out here. It's contact@bkforex.com, right? You could just. Contact, and actually, maybe Roger, you can email it to them at bkforex.com. Feel free to email us, ask us any questions. I'm going to be doing a very, very intense 4-hour webinar on a lot of these strategies next Saturday. If you guys want to come join us, just email me. I'd be happy to email you the link on that. And anything else you got to say? I'm happy. Katie, is there anything else you want to say on a wrap-up?
No, that's pretty much it. And hopefully you enjoyed the session.
Yeah, I hope you guys enjoyed the session. Any final questions from you guys? Anything else, Roger?
Let me see here. Someone was asking if you thought about entering the dollar CAD short now that it was close to 128.42.
Oh, good question. It's actually 50, 28.50. That's a good question.
Yes, I think this is a good place to enter. U.S. yields are kind of flattening out right now, and right here 50 is my 20 SMA on the hourly chart. So this would be a really good place to enter, I think.
Okay, there you go. That's your final trade idea for the day. All right. So I'm still floating this yen, looking for the 17. We'll see if 17 eventually hits on the 13.17. That's off that setup that I showed you, and that's it. And I'm still holding the Aussie yen. I think that's kind of. Let me see if that's surviving. I haven't even looked at. No, it doesn't look like. I think I got clipped on the Aussie yen. I held that too long on my. Well, I think I got done on the. I got done on my. You see that, by the way? This is perfect, actually. Just as we end the webinar, my setup hits. Right, my setup hits. So the dollar-yen non-farm payrolls. Anybody trade that setup, by the way? Anybody follow? I'm just curious, Roger. Ask anybody in the room if they followed me into that setup.
Okay, I'm asking about looking to say we've got.
No, I actually personally.
People that said yes.
Just so you guys know, personally for our members, I actually did go short at 128.50 for dollar CAD. I think you'll probably see at least 124.40, maybe in the 30s. Okay,
so K is short 28.50 on dollar CAD, but in the meantime, that RSI non-farm setup that I showed you worked like a charm. What is this? This is the 12th month of the year. You look on 12 months, right? Boom, right? Now, guys, we have one. If you guys want to stay up till the wee hours of the morning, in Melbourne and Sydney and everywhere else in Australia, and everywhere else, in Asia, if this thing turns and the RSI goes back up to 50, we'll get long for the final trade of the day. Only if we get RSI momentum to change on us. All right, but look, let's like knife through butter, right? Smooth as silk. That was a great trade. I'm glad it worked for everybody. All right, perfect note to leave you guys with. Email us if you have any questions. Come see me in the webinar next Saturday, and everybody have a wonderful, wonderful weekend. Thanks, Roger.
Thank you very much.
Okay, bye.